He was married 47 days. A 2,000 rupee loan, that's all it took. Recovery agents called his contacts. They morphed his wife's photos, shared them with everyone he knew. He couldn't take the humiliation. Shorda Narendra was 21 years old. This isn't an isolated incident. This is an epidemic. India now has over 11 crore credit cards in circulation. That's a 76% increase in just 4 years. Credit card debt that's overdue, 33,886 crore rupees, up 44% from last year. But here's the number that should terrify you. According to a nationwide survey of 10,000 financially distressed borrowers, 85% spend more than 40% of their monthly income just on loan repayments. 85%. These aren't people who bought luxury cars or took exotic vacations. These are people who needed money for medical emergencies, for their children's education, for a family wedding. India's household debt has climbed to 41.3% of GDP, above the 5-year average. And it's being driven by one thing: consumption loans, easy credit, instant approval, pay later. The promise sounds simple, the reality is a trap. Let me show you how this works. You download an app, it promises instant loans, no paperwork, no credit check, money in your account in minutes, but first it needs access to your contacts, your photos, your location, your messages. You tap allow without thinking. Everyone does. You get the loan, maybe 5,000 rupees, maybe 10. The interest rate is buried somewhere in the terms and conditions. 36% annually sounds manageable, but that's not how they calculate it. Processing fees, service charges, late payment penalties, insurance premiums you never asked for. By the time you realize what's happening, that 5,000 rupee loan has become 15,000, then 25, you can't pay, so you take another loan to cover the first one, then another. This is called credit juggling, and the apps know you'll do it. They're counting on it. Now comes the part they don't advertise. You miss a payment. Within hours the calls begin, not just to you, to your mother, your father, your boss, your colleagues, everyone in your contact list. Your son owes us money, your employee is a defaulter, pay now or face consequences. But it gets worse. Remember those photos you gave access to? Recovery agents take them. They use editing software to create morphed images, explicit images, and they threaten to send them to everyone you know unless you pay. This isn't speculation. This is documented. A 22-year-old engineering student in Bengaluru, a young couple in Madhya Pradesh who killed their own children before taking their own lives, a 17-year-old girl in Maharashtra who left a note for her father. These are real people, real families, destroyed by apps on their phones. So who's behind this? The digital lending industry in India has exploded. Hundreds of apps, billions in funding, venture capital from around the world pouring in. The business model is simple. Target people who can't get loans from banks, charge them interest rates that would be illegal in most developed countries, and when they can't pay, use their own data against them. Recovery agents are trained in psychological pressure. They know that shame is more powerful than legal threats in Indian society. They know that a call to someone's workplace can cost them their job. They know that morphed photos can destroy a marriage, a family, a life. This isn't a bug in the system. This is the system. Every suicide, every destroyed family, every person pushed to the edge, it's all factored into the business model. The default rate is expected. The harassment is budgeted. The human cost is acceptable because the returns are extraordinary. Where are the regulators? The Reserve Bank of India identified over 600 digital lending apps operating in the country. 600. How many has the government blocked? 87. The RBI has guidelines. Recovery agents aren't supposed to call before 8 a.m. or after 7 p.m. They're not supposed to contact third parties. They're not supposed to use threats or intimidation. But there's no enforcement, no accountability, no consequences. Even the RBI's own deputy governor admitted that digitalization is compressing regulatory response time. In other words, the scams move faster than the regulators can respond. Karnataka became the first state to pass a law specifically against coercive loan recovery. The chief minister announced they're considering 5 lakh rupees compensation for families of victims. But one state, one law, against an industry operating nationwide, across hundreds of apps, targeting millions of people. Who are the victims? They're not who you might think. farmers trapped in microfinance debt cycles, women in self-help groups pressured by their own neighbours to repay. The BBC documented this crisis over a decade ago. It's only gotten worse. Young professionals seduced by buy now, pay later. One purchase becomes 10, 10 becomes a lifestyle. The debt is invisible until it isn't. Gen Z, the most digitally native generation. Also the most vulnerable to apps designed by behavioral psychologists to maximize engagement and minimize friction. They call it invisible debt, small amounts that don't feel like loans, until your entire salary is gone before you receive it. But there is hope. The RBI is finally taking action. New guidelines on digital lending, a public directory of legitimate apps, proposed compensation of 25,000 rupees for fraud victims. Karnataka's law is showing results. The Chief Minister reports that harassment-related suicides are declining since the legislation took effect. And awareness is growing. People are learning to check if an app is RBI registered before downloading, to read the terms before accepting, to report harassment to the banking Ombudsman. If you're being harassed by recovery agents, know this: they cannot call you before 8 a.m. or after 7 p.m. They cannot contact your family or employer. They cannot threaten you with violence or legal action they can't take. They cannot share your information with anyone. You have rights, use them. Shorda Narendra didn't have to die. A 21-year-old fisherman, newly married, his whole life ahead of him, 2,000 rupees, that's less than $25. The question isn't whether India needs credit, it does. Millions of people need access to loans that banks won't give them. The question is, at what cost? When does financial inclusion become financial exploitation? When does easy credit become a death sentence? 600 apps, 33,000 crore in overdue debt. 85% of borrowers trapped, and counting. If you or someone you know is struggling with debt harassment, report it to the RBI's banking ombudsman. The number is on screen. If you're in crisis, reach out. You are not alone.